Hi everyone, I'm Keenan, and really what this tailors to is the large number of businesses that are going to be transitioning into retirement age over the next 5 years. And specifically for Mower County, this is 53% of the businesses that are going to be reaching a retirement age in the next 5 years. And this is a pretty big statistic and a big issue because of some of the numbers this affects. Just in Mower County, we're talking about 362 businesses, over 3,000 employees, and $650 million in revenue. And when you take that same number and you broaden it out for the state of Minnesota, which is, again, if you're thinking about selling a business or challenging, you're not just working only potentially in your county, you could be facing forces outside of your own county. And that number gets even larger. So when you're looking at specifically the state of Minnesota, that's 52,334 businesses, over almost 600,000 employees, and over $124 billion in revenue. So we're talking, that's a large number. We're going to talk about BST, business succession transitions. What is it? We're going to talk about why it's important to you, why it's important to everybody actually. We're going to talk why is it difficult for a business owner to actually focus on this. It's not something that you may think about a lot. What's causing you not to move forward with this? And then lastly, what can business owners do? So we're going to get into some detail here about some of the things you can do, short-term, long-term, the things you can start planning. And at the end, we're going to go some questions. I might also give you some resources that you'll be able to go to and actually select some of this information. So let's dive in. So BST planning, what is it? The basics of BST planning is really succession planning. So succession planning is something people talk about, but for a business, what does that really mean? What is that? And it's really the process of planning for the day on which an owner decides to step down from their leadership role and the ownership role of their business. Two separate things. We're going to define that a little bit, but really that's what BST is talking about. It's going from the aspect of I own this business and I run this business, and in the future I'm not. So how do I get from point A to whatever that point is into the future? So let's talk about this. There's actually some very specific areas that you have to focus on when you're thinking about BST. And the two main events is ownership and leadership of the business. And again, we're going to define these and we'll have some discussion around these because these are both very important. And depending on what type of business you have, the leadership role can actually be more important than the transition of ownership, because that could be the reason your business is successful as it is. It's who you are. It's the relationships you've created. So transfer of ownership is the purchasing. It's actually the legal, the tax entity, the financial aspects of the business. And that's the actual transfer of ownership. It's selling that Corp, C Corp, S Corp, LLC, all of the information that goes with it. That's the purchasing. The other part is the transfer of leadership. That's the operating aspects. That's what you have brought to your business for years. It's the owner aspect. It's the specific elements that you have brought, the management style, the connections, the relationships, all of that. And that transfer of knowledge and management is another huge piece of BST, because all of that has to be understood when you're thinking about selling. How do you have that documented? How do you communicate that? How do you make sure that if someone was going to buy your business, they're successful as they transition? So both are important to plan in this process, and we're going to talk a little bit about those. So why is BST important? Why is it important to anybody? I think the one basic question that you need to ask yourself is, what would happen if I was not able to run my business? Some people call it the hit by the bus theory. Is if I'm driving today and get hit by the bus, what would happen to my business? And this falls into a category what's commonly referred to the 5 Ds of business transitions. These are things that are forcible transitions. These are things that you don't want to have happen to you in a business transition, but could at any point. So this is why BST is important to anybody, whether you're retirement age or not. If you, at any point, someone can suffer the death, divorce, disability, disease, or a disaster that causes them to not be able to run or be part of their business. And that's why BST is important to anybody. So whether you are in the retirement age or not, these instances can actually cause or do a forced cause of your business tax to transfer. So again, BST isn't just for people that are getting close to their 60s or over 60. It's really for something that anybody can be thinking about. actually 99% of business owners actually agree that BST is important. But yet only 48% of them have actually done any thinking or any planning at it. And of that, almost only 90%, when they took the averages, had actually written anything down, talked to personnel, reached out to people, wrote a plan down. So again, there's this disconnect of they know it's important, but they actually haven't done anything to actually progress in moving that thing that they know is important. That's one of the barriers that people get into when they're thinking about BST. Specifically, why someone knows it's important, but they haven't done anything yet. And part of that is complications around many different factors that we're gonna get into. Another reason why it's important is a lot of people understand that it's probably gonna take time to sell a business, but it actually takes a significant amount of time. And average business can be up for sale from the starting process to the end, anywhere from a year to 3 years. The average is somewhere around 2 to 3 years from the time they start until they're completely out of the business. And that depends on the size of the business. It could be multiple factors. There are businesses that sell in a short period of time and can transition really quickly. But this, I'm talking about averages. But again, it's a complex process to go through all of these documents, to go through the operation and all these things. So it's a significant amount of time. The other thing is if you're a key leader in this business, so you have a business that requires your connections or your relationships, those transitions even take longer and have to be thought of. But again, another key piece that's important is statistics actually show only one out of every 3 businesses that go up for sale actually sell. And that's a pretty scary statistic if you're thinking back, I'm relying on this business to be my retirement, to be a transition, those type things. But it's also been proven that people who plan this out and do BST have a much higher success rate of selling their business than businesses that don't. But just to give you a graph, what a lot of individuals think about, and again, these percentages on this graph don't add up to 100%, because there's people that think of multiple different ways that they can sell their business. Is an ESOP, was an employer, which is a way to sell it to a group of employees at ESOP. We're going to talk a little bit about that. Sell to a private equity. Some people actually just plan to close the doors. I'm just done. I'm going to sell assets and walk away from the business. Some people actually say, I'm going to transfer it to my children. Some of them sell to employee or an employees, and the other one's to a third-party sell, which is maybe a private equity group or something. But all of those are different transitions, and all of them take a different level of planning. But these are what business owners think of how they're going to transition, which are very accurate, but at the same time can also be very complicated in how this goes along. So getting back to that question, why about 50% know that they should be doing BST, but actually the 90% actually start doing it. There's some really big barriers that business owners face when they're trying to do BST. The top barriers are what everyone thinks: time, cost, knowledge, confidentiality, lack of awareness about how to do it. Now, these are true barriers to people because all business owners are busy. They've done a lot of different things. Some people think it's highly costly, which it can be depending on how you go about it. Knowledge, where to start, is another key factor. And then a lot of people don't understand that the process, the value that it can create at the end, and we're going to talk a little bit about that, about pre-planning this, can add at that. So I think all of those barriers are real barriers, and those are things that you have to think about when you start this process. Why some people don't start is they're not interested, they're not ready. We're going to talk a little bit about the psychological factors that business owners have to go through too as well. It can be a big barrier. Business valuation's too low, or they overestimate. So sometimes people get into this worry of, I'm not sure my business is valuable enough, so I don't know if I can sell it, or I think it's worth so much that I've tried to sell it and I can't get it. So the valuation is another area where business owners get tripped up. And we're going to talk a little bit about that and how you can actually prepare for that as well. Don't know where to begin. This is a big one that people say, well, where do I start? It's like how to eat an elephant one bite at a time, right? I mean, this is a big thing. It's probably something you only do once in your lifetime. So it's a challenge to actually start. So that's another barrier, a major factor of what it is. And then another thing that a lot of people responded to in the survey was they know it's important, but not urgent. So it's something that I can put off, and as long as I keep putting it off, I know it's important, but it's not urgent. And those are all those things that we go through when we're thinking about, oh, I know I have to do this BST, and that's one of the reasons why you get the response that 99% that know they need to do it, but less than 50% have done anything, and 90% don't have anything written down. So that's the reason some of those statistics exist. So another actual big factor when you come into thinking about business succession and transitioning is the readiness issue. And a business owner, put your blood, sweat, and tears into something that you've grown from potentially nothing all the way into something successful where you're making large amounts of revenue, and it's who you identify as an individual. Business owners need to work at multiple layers when they're planning this out. So not only do you have to think about the business ready, the financials ready, but you have to actually think about external forces and internal forces in the business. But one of the biggest ones that all business owners have to focus on is the emotional aspect of the owner. Am I ready to walk away from this? This might be my identity. This might be who I am to my community. It might be who I am to my family. It's been something part of me for years. And that's an aspect that all business owners have to think about is, am I ready? What will I do later? Some people are like, yeah, I'm done. I'm ready to walk away from this. I don't need it anymore. But there are some aspects that it's hard. It's who you associate with yourself. So those psychological challenges of actually thinking about getting rid of something that's been a big part of your life for your is a true challenge for many people. So again, that's another difficulty that a lot of people have to think about when they're going through BST and actually preparing themselves as well as the business to move that forward. So we're going to talk a little bit about now, we're going to shift into what can you start doing today. So if you're a business owner, what can I do? So the first thing is start planning now. And I always think of things like the why, the when, and the who and how. And the who and how, we'll talk why we bring those together. But the who and how is to consider the different ways that you can sell your business. So again, the who might be who it is, but the how is the process of getting that person on board to potentially look at it. But start planning is the key. Seek out resources to assist you. And we're going to discuss some of these. There's a lot of resources, some free, some not free, but there's resources to be able to help any business owner to be able to transition or start BST and help them as they go through the transition. Start preparing your business. And we're going to talk about these financial operation and the different documents you have to prepare for this. All of those are important, and you should start thinking about that as well. And then seek out a mentor. This is something that a lot of people don't think about, but there's people that's been down this path before. There are individuals who've sold businesses. You may know some of them. It's a great idea to reach out to them and say, how did you transition this? What were some of the things that you faced? Those are great ways to make connections, not only to help yourself maybe emotionally as you're thinking about selling something away, but also to tell you about the black and white aspects of selling the business, what the contracting was like, how hard was it to get the money for the person to buy it. All of these different things, these people have been down there before. So let's dive a little deeper into these steps, and we're going to go into BST in a little bit more fashion. So first one is be ready. Create a management plan in case something happens. So this gets back to those 5 Ds that we talked about earlier. But a management plan is really, what happens if I wasn't to show up? This is one of the first things you should start thinking about. A lot of people have this informally. It might be, hey, if I don't show up today, Johnny is going to be the person that runs and makes the schedule and does whatever it is that needs to happen. But some of this needs to be formally written down. And as you get into BST planning, making sure you have your management plan in place of who's in charge of what, who's in charge of ordering, who's in charge of maintaining schedules, who's in charge of payroll, who's in charge of those big aspects, and how you go about that. The actual process steps are key, because those are one of the things that most people don't think about, but are actually critical to the success of whoever would come into your business, or if you met one of the 5 Ds in that transition. So those management plans there. One of the second key things is getting your financials ready. We're going to walk through one of these, but this isn't something that is as easy as you can just switch on and off. There are some things that people do in their financials, and I'll give an example of one, and some of you may have this that you're doing already, but it can really affect the price of your business. And when I say getting your financials, it's also looking at your assets and liabilities. Are they clearly documented on your balance sheet? All of those things. So getting your financials in order are another key aspect. Clean up inventory and sell outdated assets. This is a thing as you get into BST, people don't think about this. They think, oh, inventory in the books looks good, it gives me an asset. It's not always a good thing. If you've had long inventory and you have low inventory turns, it can actually look as a negative thing when someone's valuing your business. Something you need to think about. How do I get rid of that? How do I get rid of an old asset that's not really being used anymore? When a new business owner comes in and he sees something dusty sitting over in the corner and it's not being used, he doesn't want to have to deal with that. You want to transition those things out. You also want to think about your key suppliers and contractors. Getting a list of who helps you in your business, who provides you stuff and who you sell to. What is that contracts that you have, those agreements in place? Do you have them clearly listed out? Do you know their terms? Do you have the contacts of who you work with those? These are all key things that you have to have because this tells the value of your business. If you have suppliers and distributors you send to, these are key aspects and agreements that you have to have in place and documented well so that whoever was to come in and look at buying your business understands that part of your business as well. Another one is seek out resources exist. We talked about that before. You probably have some of these resources. You may have an accountant, you may have a lawyer, you may have a broker that you already work with. All of those are key resources that can help you in this transition. We're going to talk a little bit when we go into the financial example of how important it is to let your accountant know that you're thinking about making this transition, because it is a big deal and there's some things that they can help you with to start thinking about as this. Other resources we're going to talk about at the end. I'm going to talk to you about some free resources and some, I'd say, cheaper resources that you can do to reach out to help you through this process. The last one is know the value of, the second last one is know the value of your business. There's multiple ways you can estimate your business. We're going to talk about the 3 most common ways, and we're going to review some valuation methods. And then last, plan out when you're going to leave. So again, this is both the ownership and the leadership. Sometimes if your business is heavily reliant on you as a leader, you could sell it quicker, but maybe you need to make a transition plan for a year because maybe your relationships are what drive your business. I think that is a key aspect when you're planning out that transition. So when you're thinking about selling, are you such a key leader that you may need to do a year transition plan? That mentoring to help a new business owner can actually help you sell that as well. So anyway, let's dive into a little bit more here on what a business owner can do, the who and the how. So there are multiple options when you're thinking about. So going back to thinking about who and how you're going to sell that. There's different ways that you can think about transferring that ownership and the leadership. So one is sell to a family member. There's a lot of times that people have legacy businesses where they father started the business or a mother started the business and they've transitioned to their children or another family member of somewhere. That's a great way to transition, but it's still a complex nature because maybe you need the money out of your business. So how do you plan for your family member to pay you? How do you plan on making sure they're ready to manage the business without you? Those are all still complicated aspects that need to be thought through. The other one is maintain ownership but transfer the leadership. This is another common way where you can sell it to a family member, sell it to an outside person, or even an employee where they may not have the upfront money, so you be a silent partner. They come and manage it, and then you can figure out how to actually sell it by them getting a loan, paying you off, doing different ways. But that's another process. That's kind of a silent partnership way. There's also ways to sell to employees where there's actually a resource we're going to show here. It's called the Minnesota Center of Employee Ownership. There's actually a whole nonprofit that's focused on this, and they work on 3 different ways, which is called an ESOP, which is an employee stock ownership plan, a workers owned cooperatives, or an EOT, which is an employee ownership trust. All 3 of those are different ways to sell to a group of employees. They're kind of new. A lot of people haven't talked about them. I'm not going to go into depth. The website takes you right to the employee ownership. This is Minnesota, it's called CEO. And there has tons of information about employee ownership how to get help to learn about employee ownership, and all of these different mechanisms. Last one, private equity groups. So depending on your business and what type of businesses, there are attractive for private equity groups where they actually hold a conglomerate of businesses and sell them. May not be the right thing for you and your community from that standpoint, but those are definitely options that you can look at the selling. And then the third party, there might be just one individual outside, or you might go through a broker or something of that's looking for those different things. So those are all different ways that of the who and the how that go into actually transitioning in the BST of the business. So what else can business owners do? And we talked a little bit about this before, but the valuation is important in your business. Now we talked in one of those sessions of making sure you understand valuation, but this is actually really crucial that your financials in order to make sure that you get the best valuation of your business. And as I stated before earlier on, making sure that your attorney, your tax attorney, or your accountant, whoever you work with in your business, understands that you're thinking about transition, they can definitely help you this. But I'm gonna walk you just through an example that I know personally many business owners do, is they may have some personal expenses that run through their business that's helping them. They may pay themselves rent for the building that they own. They may buy a car that's really their personal car. They may have what it is, but if an example here, if you actually have $1,000 per month that is running through your business expenses that are coming out that aren't truly necessary to be part of your business, I know it may reduce your taxes, liability, all those things, but what that can do in the long term, that can affect the value of your business by $18,000 to $60,000, 1.5 to 5 times the value to get return on that from an annual basis. And that gets back to how they do some of the valuation. And in reality, having unnecessary expenses on your P&L is a bad thing when you're thinking about selling your business. You want to show as much profitability as your business as you can. And I know that may make you pay taxes a little bit more in the last couple of years as you're transitioning, but it's going to actually help the valuation of your business later. And why this also gets important is you might think, well, maybe they can add it back in. Most bankers and lenders won't allow you to come in with a P&L and say, well, this isn't a real expense on here in the P&L. And they won't let you add that back into the valuation. They go strictly off of what the tax documents state. So again, it's something you have to really consider as you're thinking about making that transition. So we're going to talk about valuations, the 3 most common valuations. There's multiple valuation methods. As you can see from the slide here, there's different ways and sub-ways that people can look at valuations, but the 3 most common is income-based, asset-based, and market-based. We'll start with the easy one. Market-based is exactly what you think it is. There's a market of businesses selling out there, and people can go out and say, your business looks very close to this business. This business sold for X, yours should probably sell for X. And they do a comparison that way. They do a little bit of comparison and maybe do some income statements with these, but that's pretty much how market-based goes. The asset-based model is basically, if you think about your balance sheet is assets, liabilities, owner's equity. Asset-based looks at this. They take your assets of your business minus your liabilities, and they say this is the value of your business. It's a very simplistic way to look at it. It's not always an accurate way to look at your business. But again, if you're a heavy asset-based, meaning you have buildings, you have equipment, all of these different things that bring up the value, that is another way that you can look at actually valuing a business. In true reality, most people that are looking at valuing business look at multiple models. They look at all 3 of these and compare them. The last one is income-based, and there's 2 different types. There's a capitalization of earnings and discount cash flow rate. I'm not going to go into these. They're a little bit more complex, but basically it's saying I've made this much earnings or I've made this much income, and you're projecting out either from a retrospective look going into the future of what the value is and then you discount it, or you're looking at what the earnings are and figuring out from a multiple of those. So those are 2 different methods that you can use for income based. But again, as I said, valuations depend a lot of factors, and there's a lot of things that go into these, but all of these 3 models are basically what anybody's going to look at when they come to look at valuing your business. Some other things you can do is, again, as we talked about those resources, so you've got attorneys, wealth planning, transition advisors, SCORE SBDC, which we'll talk a little bit about, accountants, business valuation professionals. These are all people you can surround yourself with resources. And some of these you may already have. You probably already have an accountant, many of you. You may have already worked with a small business development center. You may have already talked to an attorney about this. So there's different aspects that you probably connected, but when you start in BST, you actually have to make those connections and figure out, and how much have you communicated to them? Do they know all of this information? How well have you communicated? Have you laid out your plan? But all of these are different resources that you can be able to get to and should get to as you're going through this process. So these are the key ones that will help you. And again, this last slide is what business owners can do. These are actually free resources. So there's some really key areas that you can get free assistance that's, I think, great resources for any business owner or someone who's trying to help someone with a business owner. And the first one is the Minnesota SBDC, which is the Small Business Development Center. You can get free consulting. There's individuals who can help with valuations, help you with the planning. When you get into the actual execution process of selling your business, they can help you plan that out, represent you, represent your benefits. They can't do both. They can't be in the part of selling, but they can definitely help you in that process. Another group is the Minnesota CEO group, which we talked a little bit earlier. This is the group that if you think that doing an employee, like an ESOP, where they're a group of employees are going to buy your business, this is a group that can help you with all of those different types of transitions for employees, whether it's a co-op, a stock transfer, or an ESOP, all of those things. This group has a nonprofit that can support you and the employees going through this process and help you set up a process where your employees can buy the business. Other one is the Minnesota Chamber of Commerce. They were a great resource of bringing all these groups together to actually create some resources for people. They have SCORE, they have different avenues that the Minnesota Chamber of Commerce can actually reach out and get to you to help you, direct you. They may have some internal resources, but more than likely they're going to direct you to various resources. Another one is University of St. Thomas. They actually have an actual family business center there that actually supports businesses to figure out what's the best mechanism for transitioning. And again, they have actually counselors there, as well as will reach out to different resources. And the last one I'm just going to highlight is the University of Minnesota Extension Office. Now this is a paid class that they have, but again, it's a class that's that's been touted very well. They actually have a specific consultant that's been doing BST for a long time. They work with Vision One. They actually go through a multi-stage process through a training, through either in person or via online, that actually walk you through these different steps. And all of these resources are ones that can help you move forward either at no cost or very low cost. Okay, so we've talked a lot about business succession transition. We've covered all the way from what's a barrier to start all the way to what you can start doing today. And we covered all different types of aspects. The best thing you can do is start. Think about, what am I gonna do? When am I gonna sell my company? Do I need to do this? Where are my stages? I don't plan on selling it, but I need to do a managerial plan because I need to worry about those 5 Ds, all the way to, man, I need to sell in a year because I am just burnt out. So the big thing is to start. Reach out to the resource, reach out to the different areas, your Chamber of Commerce, the DCA, any of those areas to actually start the conversation, because that's where it starts. Start the conversation, work with someone, hold yourself accountable, and start moving forward today.